Have you ever just looked at one of the financial apps on your phone and wondered, how did this thing go from just a cool idea to a massive company traded on Wall Street? Well, it's this incredible, dramatic journey, filled with high-stakes decisions and billions of dollars. And today, we're going to break that entire life cycle down. Okay, so to really get a grip on this, we're going to look at a FinTech story like it's a three-act play. Simple, right? Act 1 is the early stage. That's where the foundation gets built. Then comes Act 2, the growth stage, which is all about the fight for market dominance. And we finish with Act 3, the maturity stage, where a company really cements its legacy.
So let's kick things off with Act 1, forging a foundation. This is the origin story. It's that critical point where an idea has to prove it can actually be a real money-making business. And this covers the all-important Series A and B funding rounds.
Now, in this early stage, a young company has this absolutely essential checklist they have to get through. They need to get their first bit of financing, prove their concept actually works, get regulatory approval, land a key partner, and get a solid base of users. But look closely. Notice what isn't checked off yet? Profitability. Right now, it's just about survival.
The first huge test is that Series A funding round. The main goal here? To go from being just a promising idea to a business with a proven, repeatable way of making money. This is what gets the attention of early investors, like venture capital firms and angel investors. They're looking for that potential for consistent, predictable income. And how they measure that potential is what we're going to look at next.
Right, so this is where we get into some of the key investor lingo. It's not just about how many sales you make. See, investors at this stage are absolutely laser-focused on the difference between a one-time sale and a recurring subscription. And understanding that difference, well, that's the key to seeing a fintech's real long-term potential.
And that brings us to the holy grail, annual recurring revenue, or ARR. This isn't about one-off payments. It's that predictable, subscription-based income that proves the whole business model is actually sustainable. You know, think of it this way. If two companies both make $1 million, but one of them sells a one-time product and the other sells yearly subscriptions, investors are going to value that subscription company way, way higher. Why? Because that $1 million is expected to show up again next year. It's not a fluke, it's a machine.
Okay, so let's jump ahead to Series B. This is all about engineering for scalability. The model works, so now the focus shifts to massive growth. We're talking about acquiring a much bigger user base, building out a tech infrastructure that can actually handle the pressure, and locking in a solid C-suite team to lead the charge.
And that brings us right into Act 2, the ascent to market leadership. The company survived. It proved its concept works. So now, that fight for survival completely transforms into a high-stakes battle for dominance. It's all about competition, going global, and finally, achieving profitability at a huge scale. Now this, the Series C round, is where the really big money comes in. We're talking about huge institutional investors, hedge funds, investment banks, the heavy hitters. They provide the massive funding that's needed for an aggressive push into new markets all over the world and to start seriously prepping for a future IPO.
And this is just a fascinating crossroads that a company can face. What happens if a company needs more private money after Series C? What does that even mean? Well, the pessimistic view is that they're struggling. But the optimistic view? It sees a smart, strategic delay waiting for better market conditions before an IPO. It's a really high-stakes gamble.
And finally, we enter Act 3, solidifying market dominance. The journey's almost complete. That scrappy little startup has transformed into an industry pillar, a recognized and respected player in the game.
At this stage, a mature fintech is a major player. It has a loyal user base, stable streams of revenue. It's the real deal. The strategic goals aren't just about survival or crazy growth anymore. Now it's about cementing that dominance, maybe by making some strategic acquisitions or funding long-term R&D. Which brings us to the climax of our whole story, the capstone event, the initial public offering, or IPO. This is it. This is the irreversible decision to enter the public capital markets and offer shares to the entire world.
But, and this is a really big but, going public has a very high price of admission. It means you're opening your company's books up for the whole world to see. You have to comply with the most rigorous financial standards out there, things like GAAP and IFRS, which are basically the official rule books for company finances. Every single move is scrutinized by regulators, investors, and the public.
So it begs the obvious question, right? With all that intense pressure and scrutiny, why on earth would any company choose to do it? What's the payoff?
Well, the answer lies in these 4 huge strategic advantages.
First, you unlock a massive amount of capital that private markets just can't compete with. Second, it gives you incredible credibility. Being a public company is like a stamp of approval. Third, it gives early investors and founders a way to cash out, providing liquidity for all those years of hard work. And finally, it helps diversify risk for everyone involved.
So there you have it, the entire FinTech funding lifecycle, all in one glance. It's a journey that moves from building a foundation to aggressive expansion and finally to market dominance, a complete evolution from a simple idea to a public institution. This whole process really just highlights a constant cycle of innovation and disruption. And it leaves us with one final thought to chew on. What's the next great disruption in finance? And when you look at the apps on your own phone, which act of the play do you think they're in right now?